And Ed, let's start off with the long term here, because I think this is what everybody really wanted clarity on, which is their lineup is stale. Let's just face it. They've got a lot of competition now from all the legacy automakers and whatever the heck China is doing. What they're saying right now, while it's light on specifics here, provide some context here as to where Musk really wants to move this company over the next couple of years.
Well, I think definitively the shareholder deck in the first instance gives exactly what the institutional or Wall Street giants who had a more affordable EV at the heart of their bull thesis, what they wanted, and it gives the larger retail investor base who believe in a robo-taxi future what they wanted. What Tesla is outlining in this shareholder deck is completely consistent with what Dana and I reported Sunday night in the Big Take. We reported via sources that a large body of work went in at the component level and at the production process level to bring a range of more affordable EVs, not just one single model. That is exactly and explicitly what Tesla is saying in the shareholder deck. At the same time, they also are pretty explicit that a purpose-built robo-taxi is coming. You will remember that Elon Musk refuted the idea, first reported by Reuters, that an affordable EV program was scrapped or cancelled. Clearly it's not. Tesla's explaining in the shareholder deck that if anything, it's being pulled forward ahead of their original timeline of late 2025. So there's some consistency there, though you cannot hide from how terrible a quarter the first quarter was for Tesla in the near term.
I'm really interested in that idea of pulling up the timeline here. They said that they will accelerate the launch ahead of that communicated start of production in the second half of 2025. How fast can these things get out there, and how important is it that they get out there quickly?
Yeah, I mean, let's be honest. Elon Musk has a track record of not meeting the deadlines and timelines that he's set himself. He often delivers the end product just later than expected. But I think that what's interesting here is that in the first quarter, clearly the deliveries number missed. And if you look at the financials, both at the top and bottom line, it was not a great first quarter. The strategy of cutting prices to the bottom did not open up new addressable market. It didn't help them improve volumes. So the long-term thesis of many institutional investors is like, look, you need to do what the car industry's always done. Offer many more models very quickly at a range of price points, but particularly low price points. And just reading the specifics of the deck, that's what they say they're going to do.
Yeah, and they should point out, too, I mean, they are warning, at least in this presentation, that while there are a lot of long-term benefits to this, Ed, in the short term, they're saying that this may result in achieving less cost reduction than previously expected. They did not quantify that. But I want to read something else to you that they had in here and get your thoughts on it. And this has a little bit more to do about this idea that they're kind of on the precipice of sort of some new expansion. They say we're currently between two major growth waves, Ed. The first one began with the global expansion of the Model 3 Y platform, and we believe the next one will be initiated by advances in autonomy and the introduction of new products.
Yeah, my reaction to that is the first wave of growth, which Elon Musk probably has previously stated that phase between two waves, right? But let's think about wave one. Look at the inventory numbers. Tesla has 28 days of inventory of its existing products. That is an all-time high. Those vehicles are not selling. But benefit of the doubt, in the first quarter, they started to recognize higher software revenues from full self-driving. There was a sprint finish in the month of April to onboard more customers, and you guys will remember the reporting that Elon Musk was making it mandatory that if you went and picked up a new Tesla, the sales rep had to demo FSD for you. Well, that's also there as well. Higher FSD revenue recognition year on year, better software sales. But now we're in the middle, and there's probably likely to be some short-term pain where even with continued price cuts, Model Y and Model 3 where they're currently at, and Cybertruck being low volume, that's not going to be the driver of growth. Selling the software is improving, but it's nowhere near the future that Elon Musk envisaged. So it all goes to the call. Time for earnings call bingo, time for the Top Live blog, and let's actually get some concrete clarity. But the stock being up 8%, Romain, I think it really speaks to this idea that if you are the Wall Street investor who wanted the cheap EV, or you're the technology romantic who wanted the robo-taxi, you got a bit of both.